Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin refuses to break below $70,000, and market resilience at this level signals underlying strength. Right now, Bitcoin trades around $70,000, holding firm despite multiple headwinds, including Iran-related geopolitical tensions, oil prices that recently spiked above $100 per barrel, and fading expectations for Federal Reserve rate cuts. Money markets have completely priced out any Fed rate cuts for 2026. Yet Bitcoin maintains this support level with short-lived dips quickly recovering. The bigger story is happening in Washington, where a quiet but critical power shift is cementing crypto as a permanent regulatory fixture. On March 24, 2025, the CFTC launched its Innovation Task Force to develop frameworks for crypto assets, blockchain technologies, AI systems, and prediction markets. Since January, the agency launched an Innovation Advisory Committee with 35 members, including Coinbase, Uniswap, Ripple, and Kraken. They signed a harmonization agreement with the SEC on March 11th. The SEC issued a crypto taxonomy on March 17th defining digital commodities, collectibles, tools, stablecoins, and securities. Circle's stock plunged 20% on Tuesday following news that the Clarity Act would restrict stablecoin yield rewards. However, analysts argue the sell-off looks overdone. Bitwise Chief Investment Officer Matt Hogan projects Circle could reach a $75 billion valuation by 2030, noting that yield is not the primary driver of stablecoin adoption. Ireland's Criminal Assets Bureau cracked the first of 12 Bitcoin wallets seized from convicted drug dealer Clifton Collins in 2019. The wallet contained approximately 500 Bitcoin worth $34 million. The 12 wallets have since appreciated to approximately $418 million. The Ethereum Foundation unveiled a comprehensive post-quantum security initiative with an 8-year roadmap integrated into the next 4 hard forks. The execution layer will use post-quantum signature verification through account abstraction. The consensus layer will replace the current BLS validator signature scheme with hash-based signatures, and the data layer will extend post-quantum cryptography to blob handling. Bitcoin miners are undergoing structural transformation driven by collapsing margins and debt-funded pivots to artificial intelligence infrastructure. Marathon Digital changed strategy in 2025 to permit Bitcoin sales. Core Scientific sold over 1,900 Bitcoin in January. Listed miners could derive up to 70% of revenues from AI by the end of 2026. Prediction markets face mounting regulatory scrutiny. 3 primary risks were identified: privileged information monetization, traders with ability to influence underlying events, and platforms functioning as misinformation engines. U.S. Congressman Seth Moulton implemented an office-wide ban on congressional staff participation in prediction markets, and bipartisan legislation was introduced to formally restrict trading by federal officials. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.